It is now time to begin, and I would like to give a brief overview of Wisdom Over Wealth and introduce you to our presenters for the webinar today. Wisdom Over Wealth is a CPA ministry who partners with churches to see the kingdom advanced through righteous and practical financial solutions. Our desire is to partner with churches with our wisdom, knowledge, and skills to help you be the most successful you can be. Wisdom offers services such as church payroll, church accounting, personal tax prep, and more. We like to deal with the details so churches can focus on reaching people for Jesus. The Wisdom team is made up of 11 individuals with church financial experience. All 11 of us have our own personal faith walks with Christ. 2 are certified public accountants, and 2 are licensed ministers. We do accounting so you can do ministry. At this time, I would like to introduce one of our presenters today, Allison Michaud. Allison began her accounting career working for a Big Four accounting firm where she concentrated on individual and business taxation. She has a Master of Accounting degree from Wingate University and an undergraduate degree from Western Carolina University. She is a member of the AICPA and the NC Board of CPAs. Our next presenter, Caitlin Spalsbury, has worked for Wisdom for 9 years. Prior to joining Wisdom, she provided accounting and reporting support at the Northeast Foursquare District office, where she provided accounting and reporting support for both large and small local churches. She holds a Bachelor of Arts in Transformational Ministry and Bible from Life Pacific University in San Dimas, California, and she is an ordained Foursquare pastor. On our webinar today, we have 3 objectives. First, we want to provide the basics of clergy compensation. Then we want to explain clergy taxation and give an overview of clergy taxes. And again, before we dive right into the presentation, I want to remind us that we have provided a few short Q&A sections within our presentation and at the end, so please share those questions as we move along. Just post them right into the chat. At this time, I'm going to turn the presentation over to Caitlin and Allison to get us started.
Well, hey there, everyone. It's good to be together and pretty excited about a maybe not so exciting topic for you guys, clergy compensation. Since we're going to start with a clergy compensation introduction, a good place to start is with a definition. I think in the church world, oftentimes we consider a minister or a clergy to be something slightly different than what the IRS would consider a minister for taxation purposes. So when we're talking through today, we are talking with the baseline of the IRS's definition of clergy. So if you know someone who is operating as a clergy but doesn't necessarily have both of the things the IRS is looking for, this may not apply to them. So the IRS's definition of a minister or clergy is someone who is licensed, commissioned, or ordained where they're employed to provide ministerial services. So there's 2 parts to this definition. 1, licensed, commissioned, or ordained. What's important here is that normally to be licensed, commissioned, or ordained, this includes some sort of training, whether it is seminary that you have to go through to get the training and to become licensed or commissioned or ordained, or if there's a process, some sort of not necessarily schooling or a class, but you have to go through a training, meeting with someone, learning about your denomination or your church. There's more training and information that you need to know to be considered licensed, commissioned, or ordained. It's not enough for somebody to just say, like, you seem good enough, here you go. So the IRS is looking at that to include more than just that. The second part is that to provide ministerial services, so employed to provide. So it's not enough that you would just hold your license or ordination. For instance, I am ordained with Foursquare, but for the purposes of my employment as Wisdom, I'm not considered clergy for my employment at Wisdom. That's because I don't provide necessarily ministerial services for a nonprofit. I do feel like I hopefully minister to our team and we minister to each other. But in this instance, I'm not doing sacerdotal duties. That means these duties are preaching, communion, ministry, other things like that. That all of you who are on this webinar would probably know, you know someone or you yourself have those duties as part of your job, as the expectation of what you are doing. So someone, when they have both of those things put together, the IRS would consider them clergy or a minister for the different taxes and compensation that we're going to talk about. Onto the next slide. The reason why that's important is because for clergy, there are multiple different types of compensation. So the first, there's two main aspects of clergy compensation, not just two, but two main parts of it. The first is clergy salary. Most people know what a salary is, but for clergy salary, that compensation type is both taxable for income tax and SECA. So you're going to hear us talk about SECA a lot today. So SECA stands for the Self-Employment Contribution Act. If you've ever been employed outside of a church, you would know that you normally get your pay stub, and on your pay stub, you'd see whatever your hourly or salary rate is. And then on the tax section, you'd see like federal income tax, Social Security, Medicare, maybe some state taxes taken out. Social Security and Medicare, as it's listed there, is something that's considered FICA, Federally Insured Contribution Act. It's where half of 15.3% of the FICA tax is calculated on the employee's earnings, and half is calculated and withheld on the employer side. So that tax is kind of 50-50 employee-employer. That same concept of Social Security in that arena for self-employed individuals or clergy comes through with the SECA tax, and it's the full 15.3%. So clergy are taxable for their salary for both federal income tax as well as for SECA, the full 15.3%. The second main aspect of clergy compensation is clergy housing. So this could be cash housing, this could be in-kind housing or parsonage housing, this could be a combination of cash and in-kind housing. But no matter how you receive it, clergy housing is taxable for only SECA. So only the 15.3%. It's not taxable for federal income tax. Other types of compensation, such as bonuses, pastor appreciation, gifts, including benevolence, all of those are treated the same as clergy salary. So if you think of it as there's two main buckets, clergy salary or housing, you'll probably hear me talk about buckets multiple times because I like to think about things in that manner. But those buckets, bonuses, pastor appreciation, those go into the same bucket. They're treated the same as clergy salary. There are some additional types of compensation. So one type is taxable fringe benefits. So these are not salary, not housing, but there are other benefits that can be offered, types of compensation that can be offered to an employee, but these are taxable. So these include medical reimbursements that are just like you turn in a receipt because you went to the doctor's and your church writes you a check to reimburse you. That's actually taxable compensation to be taxed the same as salary. The same as if there's a company car that you drive, any personal use of that company needs to be calculated and then included on your W-2, and it's taxed the same as salary. There are some types of fringe benefits that are non-taxable. These would be things like a QSARA or an ICRA. Those are qualified group health plans or health reimbursement arrangements, cell phone allowances, things like that, that would be considered non-taxable fringe benefits. If they're non-taxable, they're not treated with tax. You can receive them through payroll, and there shouldn't be any tax implication either in your pay stub or at the end of the year on your W-2. There is a lot of different things that can go into these different types that we talked about. We gave you some really broad strokes, but we do have a resource that we wanted to offer as part of this webinar. We call it our pastor compensation pyramid. It's a form that we're providing for free. There should be a link in the chat that is a URL for the Dropbox, or you can scan the QR code on the screen right now. This will allow you to download the form. You can take a look at it. You can use this form to kind of put together the best tax position for the type of compensation you're trying to provide. So to use the pyramid, you need to start at the bottom, and you're going to try and kind of fill the pyramid with whatever is applicable, moving up the pyramid towards the top. So levels 1 and 2 are both tax-free if treated correctly. And then moving up, level 3 is only SECA. Level 4 and level 5 are both self-employment, so SECA and income tax. So going back to one of the main types of compensation that we talked about. So we talked about clergy salary. I'm going to make an assumption that most people here know what salary is at least. There are caveats to what you can consider salary, what's exempt salary and what's not. If you have specific details about that or questions, you can put it in the chat, or there's a contact. We have a contact page later on. You can send those questions in. But for this, we're going to pretend like we all know what clergy salary means, but we are going to specifically talk about housing allowance. So housing allowance can be kind of one of three things. One, in kind. So that means something that's in kind means you're receiving the benefit without an exchange of money. So it's the same as if you were to donate your sofa to the church. That would be an in-kind donation to the church. And so the value of what you were giving to the church could be put on a letter that you could put in your taxes, right? So in the same way, the value of what's been given of a parsonage or an apartment, maybe the church owns apartment buildings and they're giving you the ability to live in an apartment, that would be considered in-kind or parsonage housing. Then there's cash housing, and that means that the church gives you money and then you go and you rent, or you have a mortgage and you pay your utilities and you do all of those things, and you use the cash that you receive to pay those bills. There's a combination. So a lot of times when you have in-kind housing or parsonage, there are still housing expenses that you can expend. And so having cash housing on top of the parsonage helps cover the full kind of experience of housing that you would have. So in talking about housing allowance and whether it's in kind or cash, housing allowance can include multiple different things. So rent or mortgage, property insurance, utilities, cleaning supplies, decorations, and furnitures. All of that, as well as other detailed items, are all part of housing allowance. The housing allowance calculation, when it comes to the calculation on your tax return, which Allison will talk about a little bit, or talk about where it should show up at least, is actually the lesser of three things. So the lesser of the amount declared or approved by the church. 2, the actual amount that was expended to provide your home. So that's your actual rent, your actual mortgage, your actual insurance, your actual fill in the blank, or the lesser of the fair market value of a furnished house or apartment. This includes operating and utility expenses. So because it's the lesser of those three, some of the housing allowance that is paid by a church to a clergy employee could technically be reclassified on your tax return as income, so as salary, if your actual expenses or if one of those items was less than the amount that was actually provided to you. We say that, but don't be concerned. It's not a thing to be like, oh, well, I don't want that to happen, because actually, if that happens on your tax returns, it means that everything that you've spent for housing was actually covered by your housing allowance. And that means that you will be the least taxed that you could be. If you are not, if your church is not approving enough, or you're spending more than you actually are receiving from your church, you can't claim that as additional housing. So you can't move money from salary to housing on your tax return. So it means whatever was expensed out of your salary portion for housing amounts still has to be taxed for both income tax and SECA. I do think Allison will talk a bit more about that later. But it's not a bad thing for that reclassification to happen. We'd actually rather you make sure that you are claiming enough for your housing allowance so that you really get the benefit of what the IRS was trying to do when they put the housing allowance together. So Wisdom has a housing allowance form, actually, because we find that when we talk with clergy, whether it's me talking with clergy on the payroll side or Allison talking on the tax return side, most people don't know what everything they can claim for housing. They're under claiming, they're under receiving, or they're only having their church approve what they think they'll actually be able to receive. Housing allowance form in this instance allows you to really estimate out this next year and look, like, what do I think my housing costs will be? What do I think my property and liability insurance? Do I need to buy a new fridge this next year? Write that in there. Those are furnishings. Those are part of your housing allowance. And then that can be claimed. And Allison will even say, go above and beyond, add a bit of a buffer because things happen, right? Like we don't always expect, the roof to leak. We don't always expect your front door to all of a sudden I feel a breeze through it and I need to get a new front door. We don't always expect those things. And so building a bit of a buffer helps. Just like the pyramid, we have a QR code on the screen or in the chat. There should be a link to our housing allowance form. This one is on Wisdom's website via our store. It is a free item, but you will have to enter in your information to download that. But you can download it, fill in an estimate, but then throughout the year, you can keep track of and fill out your actual housing allowance expenses. And that can become easier when it's time to do your taxes. We are going to pause for just a moment because that was a lot of information. So we want to give a couple moments to answer some questions. So Megan, are there one or two questions that you think we should talk about now?
Yes,
Before-
actually.
Okay.
One question is, if a member gives, this is going back to some gifts. You had talked about other types of compensation.
Yes.
So if a member gives his or her pastor, rector, a gift without going through the church, is this subject to income tax?
Yes, but not through a W-2. So let me say yes with an asterisk. I think technically the IRS would say yes, as the clergy should claim that when they do their tax return. But outside of the fact of that individual person and the clergy knowing it, the church doesn't have to track that on the W-2 or do anything on behalf of either of them. If an individual gives money to the church with their name on it, that should be processed the same way as like salary, so that it does show up on the W-2, because it is, like I said, considered taxable income. Like I said, the IRS considers it taxable income. Do you have any additional thoughts, Allison?
I think as long as it's within the context of I'm giving you this money because you're my pastor. If it's like a Christmas gift, I mean, I don't think that's quite the same. And it depends, but use your judgment. The IRS wants more more money from us than what we want to share with them. But yeah, so I think there's reasonable side gifts, and if it's more financial, that's where the line is, I think.
Yep.
Perfect.
Agreed.
We have another, is the cell phone allowance the same as a cell phone reimbursement?
Not 100%. So technically one is so when it's a reimbursement, you need to turn in a receipt for it. it's still not taxable. So if that's what the question has to do with, a reimbursement of a cell phone because it's used for ministerial purposes is perfectly fine and non-taxable. But you do need to make sure that you have receipts turned in for that. And that would be the specific amount that was paid out for insurance or up what was approved up to a certain point. If it's an allowance, it's like a set amount. So like every month we're gonna give you $75 as a cell phone allowance, and then it's on the person to actually pay their cell phone bill using that. And you don't have to turn in a reimbursement every single month. So in that instance, for that one thing, it's similar, but the requirement on the church is slightly different between the two.
Perfect. And then just a follow up on housing. With housing values going through the roof, let's see. Is there any downside to maintaining the same housing allowance to the pastor?
Well, I think for that one, it's the pastor who has the onus to make sure that between salary and housing, they're giving themselves the correct percentage. And this has to go through the board, and different churches do it different ways, but it needs to be approved by the church. But taking that housing allowance worksheet and saying, okay, this is how much my real life expenses cost. And then what Caitlin was alluding to, I always tell my clients, add 10% if you're estimating for the future year, add 10% of wiggle room, and then submit that as what you are requesting as housing allowance. If it's been years since your pastor has adjusted that, make sure he's aware of all the things he could be taking, and that they're able to use the housing allowance to the maximum ability. It's a benefit for pastors, and we want to make sure you're already going to you already have to pay for these expenses to live, so you might as well get some tax benefit from it. So yeah, does that answer your question?
I think so. And, and you may be getting to this further down, but let's say we're 6 months into the year and realize there's some massive expenses related to the housing. As it pertains to retroactively or prospectively, what is the rule regarding changing your housing allowance mid-year?
So you can't go retrospective. Everything that's already happened has happened. You can't change salary and housing designations for the time past. However, prospectively, you can change it. So let's say that you're here at this webinar. It's already February. We're 2 months into 2024. I don't know how that happened, but so what we can't say, okay, for all of 2024, I want my housing allowance to be this chunk of money. But we can say, okay, now I've estimated it out. Now I know that I can add furniture. I didn't know I could add furniture, cleaning supplies even. So I'm adding those estimates into my housing allowance, and adjusting the salary housing line in my compensation. That's all can be handled prospectively. So the church board would approve it, or the leadership who's in charge of that would approve it. And then from that point, when the church approves it, not necessarily when you submit it, is when that would go into effect.
Perfect. Yeah, there's a lot of questions involving housing. And so we may, for the sake of time, maybe we'll catch those at the end because some of their questions may be answered as we move forward through the presentation.
Perfect.
Sounds good.
Awesome. Thanks, everyone. Keep those questions coming in.
Okay, so I think this is my portion, clergy taxation. And we're going to start by talking about, another definition. So technically, the IRS sees pastors, ministers, clergy as dual status employees. Right or wrong, the IRS classifies ministers this way. Dual status, that doesn't make any sense. You're ministers, right? You work for a church. Why would the IRS say that you have two statuses? Honestly, I don't know, but that's the way they have it classified. So the IRS sees you as an employee and self-employed. And that is just really to get housing allowance through the tax return. So for income tax purposes, you're a clergy, an employee of the church, but for social media, or social security, not media, and Medicare, you're considered self-employed. So that was the SECA part that Caitlin was discussing on the clergy side or on the payroll side. And then on the tax return side, you'll see that as a Schedule SE or self-employment. So a lot of first-time clients for our tax team will say, why is there a self-employment form in my taxes? And that's why, because the IRS sees you as self-employed. Now, there is one caveat to this, and that is if you are exempt or you opt out of Social Security. That's by using the form 4361. If you are this, you know it, you've applied for it specifically, and you will not be subject to SECA. So I just want to clarify something here. There's many opinions about whether you should or shouldn't. Just know that it is meant to be a religious reason that you opt out of Social Security. And if you choose to do that, you cannot opt back in later on. So it can only be done at the second year return that you have a housing allowance. So if you're past that point, it's not on the table anymore. But if you are before or at that point as a clergy and have convictions regarding that, something that I personally want to give as a warning is just make sure you are really saving for your retirement. There are some sad stories of ministers who opt out of Social Security and then have not saved, and then it's just a hard end of life season. So I wouldn't feel good going through this and not saying that. So okay, so that's the form 4361. You know it if you have it. And if you have no idea what I'm talking about and you've been ministering for years, it's okay. We can move on. This is not a detail you need to worry about. Okay. I think we're back to you, Caitlin.
Yeah, so clergy withholding. So talking about taxation, we've talked about that Social Security and Medicare are calculated not as FICA would. So when you look at your pay stub, it shouldn't show there. Well, then how do you get that sent in? How do you pay that? So there's kind of two different ways. The first is quarterly tax deposits. Those are due or expected to be due by those owing SECA. You can normally do that through, I think it's the EFTPS website, quarterly go in. This is about what I estimate what I should owe. I'm going to pay this, move on. The second way you can do it, especially if your church has a payroll company or you have payroll and there are taxes being calculated and withheld, you can voluntarily withhold extra through the federal withholding line. Normally when this comes up, people are like, well, how are they going to know that it's for SECA? Well, they don't. So this is another place where I talk about buckets. And so taxes can be thought of in terms of like the IRS, it has a bucket for the taxes that they receive. Whether it's Social Security, Medicare, federal income tax, any of those items are federal taxes. And those are sent into the IRS and there's a bucket somewhere in the cloud. Yeah, we're going to say in the cloud. In the cloud, there's a bucket with your name on it. And your taxes that you withhold go into that bucket. And your state ones go to the state. And when you do your tax return and you calculate out, this is how much federal income tax I'll have, this is how much SECA, this is how much taxes of income tax, Social Security, Medicare, quarterly tax deposits, fill in the blank, whatever federal taxes you withheld or paid in or sent in, those will go to one place. And if that is more than the taxes you owe, you get a refund. If that's less than the taxes you owe after everything happens, you'll owe money. So I always highly recommend if somebody has a payroll service to withhold extra through the federal withholding line, because the amount you owe is then spread out across all of your paychecks versus quarterly tax deposits are a bit bigger. Or if you wait till the end of the year, there's possibilities of being penalized, or you have a very large tax bill that then sometimes you just get into this cycle because many people don't save throughout the year for that tax bill. It catches them unaware. So I think withholding extra through the federal withholding line as much as you can, based on what you think you will owe, I always find that helpful. I do believe that Allison's going to talk a little bit about a safe harbor when it comes to those quarterly tax deposits.
So sometimes I hear pastors say, well, I'm not exactly sure what I'm going to get paid this time. Or our church is going through a rough season. I'm not sure if we're going to, if I'm going to be paid the same or the opposite, where I'm getting a raise this year. I don't know how much tax I'm going to pay or need to pay. So something that kind of keeps you, you know, in the middle of the road here without having any dings or penalties from the IRS is to pay 100% of the prior year tax to avoid those penalties. So that needs to either be done voluntarily from withholding, like Caitlin was mentioning before, or on-time quarterly payments for the year. So if you take 100% of the prior year tax, and between you and your spouse being able to withhold that, and then the remainder through quarterly payments, you won't be penalized, even if your tax is above that amount. So that's what the safe harbor is. It's a good way to, at least for the baseline, know what you need to pay. You still need to pay the tax above and beyond if you are paid more, but the penalty goes away.
Perfect. Well, now we've talked about a lot of information to this point, theory, definition, stuff like that. Why don't we take a look at two pay stubs to give you some examples. So the first pay stub is an incorrect pay stub. And the reason why is if you see under pay, this individual is receiving salary, they received a bonus at some point in the year, and they're receiving cash housing. All of those are current, the salary and cash housing. So as long as they're clergy, which is what we're assuming in this instance, because housing in this instance, as it's noted that it's clergy housing, would only be paid to a pastor or a minister. But then when you go over to the tax section, you can see that it's showing federal income tax, Social Security, Medicare, and state income tax. The Social Security and Medicare, the current calculations right there is what we want to note as being incorrect. So if you go and look at your pay stub, if you don't look at your pay stub, please do start looking at your pay stub. It's the thing I think most people should do. But go take a look, pull it up, check and see that if you are clergy and you're receiving salary and or housing, that you don't have Social Security and Medicare. If you see that as a current thing as being clergy right now, then most likely I mean, you are set up incorrectly. Thankfully, it's not the end of the world. It can be adjusted and changed and fixed, and you can move forward just fine. But it is incorrect, and your payroll, at least for that instance, is set up wrong. There is one caveat here. If this same pay stub showed up, but the current section did not have Social Security and Medicare, it could be correct. Because let's be honest, individuals don't become clergy December 31st, and then start the new year just as clergy. Oftentimes, that is in the middle of the year, you've been receiving one form of compensation as a W-2 employee, fully Social Security, Medicare, federal income tax, and then you become clergy, and that compensation changes. In that instance, you would see Social Security in the year to date, but your current clergy compensation should not calculate Social Security and Medicare. If we go to the next slide, we can show you what it should look like. So this is for a clergy that was a minister that was considered clergy all year round. They've been receiving salary, housing, and you can see that there's no Social Security and Medicare withheld. They just have federal income tax and state income tax for this individual. Not all states have that. So this individual, based on what we see here, would be set up correctly. And although I would say this person's not choosing to withhold anything through the federal income tax, so we really hope that they were sending in quarterly tax deposits to make sure that they had all of their taxes in. There are a couple more points that we want to make on clergy taxation before we get into the nitty-gritty that is a tax return. The first is that it's against the law since 1954 to pay clergy outside of a visiting minister as a 1099 MISC or 1090 NEC form. Clergy should be paid as a W-2 employee receiving a W-2 at the end of the year. The only difference for that W-2 part is if somebody is only receiving housing, they don't have to technically receive a W-2. They could receive a letter from the church that states that we paid housing in this total amount for this year. You can still have a W-2 created though. It would just show up in box 14 as informational. The second part is that churches can give clergy a taxable Social Security tax entitlement. Wisdom refers to this as a SECA gross up, and it enables churches to help individuals cover the burden of self-employment tax. So this payment or this entitlement to clergy is taxable, the same as salary. So it's taxable for income tax and SECA. We recommend a couple of things that if you're going to do that the clergy understands that it's taxable, first of all. The second is that there is at least a part of that, if not the whole entitlement, that is withheld or paid in an estimated tax payment so that they aren't out even more taxes at the end of the year. And oftentimes it's good to take into consideration that that entitlement will actually increase the SECA that's owed. So when we do this calculation, we do what I call is a rolling calculation. So you put in the initial and then you continue to increase that entitlement based on the calculation until it begins to settle. It does hit a point where the tax calculation doesn't change no matter how, like when you put it in, the same amount is owed as what was put in. That's just a side note. I think that's kind of what, when we talked about taxation. So we're going to take a moment with one or two questions before Allison opens us up and shows us a tax return.
Yes. So there's just been some follow-up, just some clarity on the cash allowance housing. Somebody's asked some very specific examples. So this person says, if we are paying a cash housing allowance equal to a furnished house rental with utilities, and the HVAC needs to be replaced, can they add that cost to an increased housing allowance? And I think we touched on, can't go back in time, but, prospectively, yes. And maybe just, if we can kind of break that down, to a little bit more specific.
I mean, a pastor can take 100% of his or her compensation as housing allowance. So, if at any point, if you want to start doing that, you are able to do that as long as it gets approved. So it needs to be approved by the church, and it can only be for the pay from this point forward, from the point that the church approves it on. So if that covers the portion that you're looking at, then that would be acceptable, but you cannot go above, you cannot go back and say, well, the salary I received earlier this year would have covered it. So I'm going to change that. You cannot do that. Only prospective.
Mm-hmm. For the rest of the year.
Yep.
So I think, Allison, part of their question was because we talked about that the calculation for housing is the lesser of 3.
Oh,
and
gotcha.
What they're saying is that what they're paying, or I don't know if this is theoretical or in practice, but what they're paying is what the fair market value of this would be, including furnishings and all of that. But then there does need to be an HVAC. Can they increase the housing to cover that, even though that would be the lesser of? Does that make sense?
So the fair rental value line of the 3. No, so the fair rental value is what you would expect to have for a normal course of business. If you were renting the home, if you were the landlord and you were renting it out, what would your cost be and what could you rent it for realistically? You can't add in, like if you're a landlord and you have HVAC costs. Those are some things you can't just add into the rent for the year. So if you think of it that way, it might be more than what you're paying now. And some, depending on when you bought your house and all of that, it might be much more now. So depending on the market where you live and your costs, it could be more, but you can't just add it in as something on top of, that goes more in the actual expenses line instead of the rental value calculation.
Perfect. And then just to go back a little bit, as it relates to the taxable fringe benefit for cell phones, can you clarify, again, as it relates to the taxable fringe benefit, is a cell phone allowance the same as a cell phone reimbursement?
Tax-wise?
Tax-wise, yes, they're non-taxable. They're both non-taxable.
I think Caitlin's just saying for a reimbursement plan, you have to provide a receipt, and for the allowance, you don't.
Excellent.
I will say the IRS, they consider that an accountable plan. So if it is a business expense or a ministry expense, like a reimbursement, any sort of reimbursement should have a receipt. And if there are not receipts that are turned in, the IRS considers that to not have substantiation and that it would be taxable. So that's anything. If you have individuals in your church that are not turning in receipts for credit card, like things they're buying on church credit cards or getting reimbursed for, the IRS feels very strongly about that. I'm not saying you should treat it that way, but it is important for the church to have receipts for the ministerial expenses that happen, including reimbursements, even cell phone reimbursements. But reimbursement versus allowance, they are both they're non-taxable fringe benefits.
Excellent. That's it.
Cool. Sounds good.
Awesome.
Okay, so we're gonna hop into clergy taxes. Now, some of you might be bracing yourselves for this portion, but I'm gonna try to do my best to keep it as simple as possible and just really show you areas just of clergy specific, taking out all the other stuff, clergy pay, and things you should look for on your tax return to see, okay, am I doing it right? Is my tax preparer doing it right? Have I been doing it right these years? So if you want to look at your 2022 return, if you have not done your 23 yet, or save that, or when the recording comes out, come back and look at this for the spots that we discuss. There's several places where we can see if you have done your taxes correctly for the clergy part of it. Okay, so I want to start by looking at the W-2. So the pay stub that Caitlin showed you earlier translates to this document. Your payroll company from your church will give you this information after the fact. Now, you're probably used to seeing this for all of your jobs that you've had throughout your life. But something that's different about clergy specific W-2s is that boxes 3 through 6 should have nothing in it. Now, this is different if you are a minister who got ordained or commissioned this year. But if it was, you've been a minister all year, those should all be 0. If they are not 0, we probably need to talk about, you probably need to talk to Caitlin about your payroll, your church's payroll. And one other thing to note is box 14. Box 14 is an informational line. It's for your tax preparer, does not get transmitted. There are more notes. So you see, for this pastor, John Pastor, he is paid $40,000 in salary and $20,000 in housing. So those are the 2 numbers we're going to try to remember as we keep this example going. So let's see what a correct W-2 looks like on the next slide. Yes, so we see it's basically the exact same thing, but boxes 3 through 6 are 0 and empty. That is because, like we talked about before, you're considered a dual status, and this does not get taken care of through your church, but through your own tax return. So we're going to take that, and now we're going to move over into the 1040, which is your personal taxes. So this is John and Sylvia Pastor, and let's go to the second page. This is just the first half. This is what your 1040 looks like, what you submit to the IRS. So we're going to look, again, this is basics. You probably have different things that you have added in, other jobs, potentially, or different income sources, different credits. We're just, for simplicity's sake, we're just looking at this one piece. So the first thing I want you to look at, does line 1A on your 1040 match box 1 on your W-2? So box 1 on your W-2 is salary only, and box 1A on your 1040 is salary only. So you should not see 60,000 for salary plus housing. This should just be your salary expense. Okay, so let's move to, so this goes through calculating your income and your taxable income, what goes into your income tax percentage calculation for your tax. So let's go to the next slide. So we see that continue throughout, and the next piece I want you to think through is line 23, which is talking about your self-employment tax. This is where your self-employment tax would show up. You will also see this on Schedule 2. However, for simplicity's sake, again, this is where you will see it. If you don't have a self-employment tax or any number on line 23, or a smaller number, we'll get into that in a minute. That is something that is a red flag. That means you are not putting through your housing and your salary through Social Security and self-employment tax. So this is the only caveat to this is if you have the form 4361, like we discussed earlier, you've opted out, that would be 0. But otherwise, let's go look on Schedule SE to see what the calculation entails. So now we'll see on line 2 of Schedule SE, was probably a few pages back. So how the 1040 goes is 1040, schedule numbers, 1, 2, 3, then schedule letters, and typically in order of alphabetical order. So SE, if you're looking through your return. So on line 2, the important piece here is that it is both salary and housing from your church combined. So it's not 40, it's not 20, it's both. So if you see both there, and the form calculates itself as you go, and that's what we should be, your self-employment tax should be based on, both the salary and the housing. And that is what translates back to that same line that we were just looking at in the 1040. Okay. Yep, and there's the bottom of Schedule SE right here that you're seeing on your screen. That 8,000 number is then, we'll see it again when we go back to the 1040 on the next slide. Yep, so that's how we get that number, and that's where you can find it and to see if your return was done correctly. So I think there's also a couple other worksheets that you need to know about that will likely be attached to your return if they were done correctly. They're ministers worksheets 1 through 4. Worksheet 1 is your housing or parsonage allowance calculated. That's where it takes those the 3 different pieces of housing and calculates the lesser of those and uses that. And if there's excess allowance, it'll add it back in. And if you used all of it, all of the allowance, it won't add more to your return than what you've been given in cash, but it'll use that lesser number. And again, we want you to have maximized your housing. And by what I mean by that is you have your actual expenses are not the least, or yes, no, we want your housing allowance to, or your actual allowance to be the least, or the fair rental value. You can't control that one, but we don't want your church designated allowance to be the least. So make sure there's enough buffer. Some years you just can't help it. You know, the roof leaks, fridge goes out, and just there's a ton of expenses that you weren't expecting. But for when you can foresee, try to do your best to add a little bit more buffer where you can. Then worksheet 2 is figuring allowable deduction for unreimbursed expenses. So if you're a pastor and you are picking up the bill for a lot of things that your church does, keep those receipts. Although we wish that church is always reimbursing, and that's the hope and what we were talking about with compensation, that should be the first thing, because it's not taxable, right? But if you are, and you have unreimbursed expenses, we're talking, you know, books, I'm pastor's wife, books, going to a conference, meals for congregants, those types of things, mileage, not driving from your house to the church, but from the church to the hospital, from the church to a conference, those items that are not the normal course of your daily week. A lot of our pastors that we work with, they use an app called Mile IQ to keep track of that. The IRS requires a log for mileage. So make sure that you're keeping track of that and not just guessing, because if you're ever audited, it requires a log. And then worksheet 4 is where it just shows the exact calculation for net self-employment tax. So if you have those worksheets in your tax return package, you have a better chance of having it done right if the other pieces that we mentioned earlier are there. Okay, let's go to the next slide. This is my favorite part, ways to lower your taxes. Yay. The first one we already kind of talked about, maximize your housing allowance. Do as much as you're actually already paying for your house and keeping up with it. Put that in as housing allowance. You're already being taxed. Salary and housing are taxed for SECA. So the designation between what is additionally taxed for income tax, your salary piece, if we can move some of that to housing because you're already using it for housing, that makes a lot of sense. You're paying less income tax on in general. So that's one of the first ways, one of the best ways to change for pastors. 2, we talked about it a second ago, track your unreimbursed ministerial expenses. Make sure that even if you're not being reimbursed by your church, that you can be reimbursed or use that against your income for ministerial expenses. Now, it's not a straight dollar for dollar. It goes based on a percentage of your housing and salary, which one's taxable. But that gets worked out on Minister's Worksheet 2 that we were talking about a minute ago. And number 3, there's a whole bunch of credits right now. There's the earned income credit, child tax credit, tuition credits, energy credits are huge. See which ones you apply for or your income has. You have kids, you know, if you're you have children's care that you pay for and is through a organization, then those are all ways that you can get credits back on your tax return. So make sure you're utilizing those where you apply for them. Okay. So I think that with this whole tax return, it's a lot. I understand for those who aren't in the weeds of it every day, like I am, it can feel overwhelming and excessive. But I hope at least these pieces of checkpoints will help you think through if your return is what it should be, or if you're saying, whoa, I don't think it is. We'd love to help you. So I think we have a slide, Megan, or are we doing Q&A first?
Yeah.
Oh, okay. No, go ahead, Caitlin.
I think Megan was gonna
Oh, sorry.
Yeah.
share a bit.
Yeah, thank you both for your deep dive into very dull and sometimes overwhelming content. It can be very overwhelming, but we want to help you. So our contact page is active, ready. Please submit, you know, a request for us to reach out to you so that we can partner with you and get you set up and have things properly filed and your compensation correct. All those things are just super important. And we want to be able to help you with that. So definitely reach out to our site there. And we'll get going with that.
And that contact page goes to both Caitlin and I. So if you have a payroll question, that's a good place to put it. Tax question as well. But on the next slide that Megan went to, sorry.
My bad.
You'll see no, you're okay. You'll see my email at the bottom. So if you have a tax specific question that we did not answer, or you're raising your hand and saying, I don't think my return's right, send me an email and we'll try to, and it's sometimes easier to talk through those personal tax questions personally, one-on-one. So feel free to
And
utilize.
if you're unsure whether your payroll is done correctly, I can do a complimentary payroll review looking at your pay stub or even your full church payroll. I can look at payroll journals. So if you actually utilize the contact us, I'll tell you the things I need to see to be able to let you know if it looks like things are set up correctly or what is set up incorrectly and how can we fix that. So questions can go there, but also if you're looking for something like that, send us a contact us page and then I'll reach out to you.
Absolutely. That's great. You know, a lot of our questions were kind of midway through the presentation, which was really just a recap of and clarifying what was already discussed, kind of trimming it down to like a person's actual experience. But then later on, things were revisited and answered. So really at this time, there's no further follow-up questions from our audience. But we do want to just recap and remind you that a recording of this webinar will be sent out to you in the coming days. Please check your inbox for it. And again, Allison put the link in our chat for the Contact Us page. Again, that does go directly to Caitlin and Allison, so your inquiry will not, somebody will respond to it. So we look forward to continuing to work with each of you. Many of you are our clients, some are soon to be clients, I'm projecting, and we're just pretty psyched. So thank you again for your time, and we'll see you next time.